Amnish Aggarwal joining us on the show. Good afternoon to you, Amnish. And let's try and dissect sector-wise what exactly is happening actually at this point in time. Today, you're seeing IT sector holding the fort pretty strong in trade. But do you think that the tide has turned for the IT sector? Can one at least say that? Or do you think this is just a short-term move? Fundamentally, things are not looking that bright as yet?
You see, this is, in my view, the typical sectoral churning which is happening. Because if you look at, say, last 6 to 12 months, you can say whole host of sectors ranging from, say, your capital goods to, you can say, your hospitals, autos. So they have seen very sharp rallies, and you can say in certain cases there has been, you can say, the stock prices have increased in geometric progression. Now, the sectors which have not done well from the last 2 to 3 years, which includes consumer, which includes IT services, and some of the, you can say, the other names might be there. So these sectors are now getting into some sort of an act. And it is not essentially a reflection of what has happened on the fundamental side, because all these sectors, for example, you are talking about IT services, is showing some signs of a revival in coming quarters. But given the fact that the valuations are not at a very steep level like it is there in many of the other sectors, and the sector has been underperformer from the last couple of years, so there is some sort of a money flow which is happening into these sectors, including IT.
Money flow happening into the IT sector, but then what's your take coming in on the entire new age tech pack actually, Amnish? Because we've seen a very good momentum in all of these counters, and some of them have actually proved their worth. The fact that everyone was dismissing, or they were dismissing those companies like Zomato, the way how the stock has performed, the company has performed actually. The financials are also telling or talking sign for that recovery that the stock price has noticed. What's your take coming in this new age tech stocks? Barring Zomato, do you think anything else looks attractive right now?
You see, very difficult for me to pinpoint which is going to be, you can say, the next big play in case of your tech companies. But having said that, these tech companies have actually gone through a phase, because initially there was a lot of hype and many of them went down. And I think many of them have already come up, you can say, led by Zomato. Even you can say Nika's numbers were better if you compare on a Y-to-Y basis. But having said that, I think many of them are funding their business models and financial parameters right. But are they cheap? The answer is no. But many of these models are futuristic, which today investors are ready to go by that narrative, and they are ready to take a bet on these stocks. So I think it will be purely on a case-to-case basis, but yes, there would be definitely a set of companies which are going to do well, and given the kind of growth rates which are expected from the new age companies, which would merit to be in the portfolio of investors.
So that's all about the new age tech stocks, but let's actually take stock of how the flows have been actually in the year FY25. We at ET now have collated some interesting data to get a comprehensive comparison between SIP and FII flows. Let me go across to my colleague Sharad Dubey, who's done all the number crunching here. Sharad, over to you.
Well, we have spoken about the SIP inflows. These are at record levels at 23,000 odd crore rupees. But there is also more details to this SIP numbers which we generally track. SIP inflows is just one part. There is also an outflow impact also, and then we come at something called as a net SIP flows. Interesting data coming in. Of course, for the month of June itself, it stood at more than 21,000 crore rupees. But there was an outflow as well. That was roughly 8,600 crore rupees. And then totally the net impact of the flows from SIP stood at roughly 12,681 crore rupees. Now, the main idea about this experiment is that the net SIP numbers is something which you can garner, and that still ranges to roughly 55 to 60% of the registered SIP inflows which are announced by AMFI. Also, interestingly, there is a second group of information which is more important, that is the SIP stoppage ratio. Now, the SIP stoppage ratio is an aggregate of SIPs which are discontinued or have completed their tenure, and that has been divided by the SIPs of new registered members. Now, interestingly, the higher the SIP stoppage ratio, that means larger number of SIPs have been discontinued. So, of course, we look at the numbers for the month of April, May, June, July. All of these numbers have been more than 50%, indicating that higher number of SIPs are being discontinued. Also, apart from these two data sets which I pointed out, let's look at how the movement has happened in the cash market for both FIs as well as DIs. And over here in FY25, look at the first 4 months or so, heavily biased towards the negative cash outflow coming in the FIs. For the DIs itself, it has been on the positive side. But apart from this, also looking at the Nifty returns, that has been positive. June month gave almost 7% return, while the month of August is giving currently almost minus 2% return.
All right, Amnish Aggarwal, Head of Research with Prabhudas Leeladhar, he's there. We're going to take the conversation ahead with him. Naresh, we've been talking technicals with him. Amnish, what's your view on Ola? I mean, last week when it went public, it was a flat listing. The issue just scaled through. There was no large rush when it went public. But from 75, 76, what the issue price was, it is almost doubled in a week. What has changed in a week that for a stock which went public a week ago did not get great response and now it's circuit up?
Nicholas, this is typically what has happened with many of these, you can say, new age companies, where the earnings are not visible as of now, but then there is a section of people who, you can say, take up leap of faith in the, you can say, the sales momentum and the fact that they will turn around in future. And secondly, I believe Ola was to, you can say, also unveil its foray into the bike segment. Although globally, your EV bikes, they have not been that successful. But I don't rule out that today's move might be, you can say, particularly due to the entry in the bike segment.
No, but my point is, has anything changed which is making markets so excited? The idea of moving towards battery manufacturing, it existed. The details were there in IPO prospectus. The fact that they would be launching a motorcycle on 14th of August, they had shared when they went public. So at 76 rupees when it went public, the general view was it's a loss-making company and it's difficult to understand the future cash flow, so please avoid it. How come that narrative has changed? I mean, I understand that if an issue had great response and it finds a lot of buyers after it goes public, it's fine. Here's the issue which did not find any buyers and now today everybody is rushing in.
Yeah, that is what I exactly said, that nothing practically has changed in the last 1 week, except that they have now actually launched the bike. Now, beyond that, is there likely to be any significant change in the, what you can say, the overall numbers, or are there any big, you can say, pickup in sales happening in the scooter segment than what it is known? I don't think anything much has changed. It is, you can say, as it happened with many of the other new age companies. So it is more to do with the confidence that the new age companies, or you can say the EV bikes, EV scooters, they are the future. And their market caps, people might think they are today lower, but in few years, these companies can be hugely, you can say, profit generating. So this is more like taking a leap of faith, and then you can say taking a call on what is in store maybe for the next few years. Otherwise, if you go by purely fundamentals, if you are particularly asking anything has changed, my clear answer is nothing has changed in the last 1 week for the stock to move so sharply.
All right, nothing's changed materially apart from the fact that Ola has gone ahead with the slew of new launches, also that e-motorbike launch. But what's your take, Naresh? Actually, let me stay with the two-wheeler space as is. What's your take coming in the two-wheeler space? With the entrant of Ola Electric, what are the charts indicating for at least TVS and Hero MotoCorp for the matter of fact?
So we've started seeing a pause in the whole auto pack. So Hero MotoCorp has corrected from 5,800, 5,900 to closer to 5,000 levels. And post the numbers also did not see a strong price action. But we are getting into a consolidation mode after a huge rally. So most of these names have done really well. So TVS Motors also is facing a lot of rejection at new all-time highs now. So the stock hit a new all-time high, but is not seeing a sharp move. But the trend is still up for TVS Motors, unlike for Hero MotoCorp, wherein the short-term trends have reversed. Same way, Bajaj Auto, if you look at it, the trends are still strong, but the consolidation is going on. So overall, longer term trend, no major change in the auto pack, two-wheelers or four-wheelers. In the short term, we could be looking at a pause in these names.
Also have a lot of brokerages, a couple of brokerages actually that were pointing out that similar case coming in for Hero MotoCorp. At least Equirus is saying that the rural recovery should drive their volume growth, but the margin is at a 13-quarter high despite losses in e-wheelers. They are saying the e-two-wheeler market share, however, they are losing in that sort of a segment, and they're seeing a slow improvement coming in, but also you have CLSA, which is saying that the EV business is loss-making, though quantum is declining. That's the take coming in on Hero MotoCorp, whereas brokerage is actually giving out their views. But technically, looks like there is a pause in the up move coming in for Hero MotoCorp. But we also have Vishal Malkan joining us on the show right now. Vishal, good afternoon. Thank you for joining us on the show. And let's exactly find out what is happening when you talk about the likes of the telecom space. You have Vodafone Idea, you have Bharti Airtel, you saw some sort of a movement coming in MTN, and I don't even know if you would call that one in the telecom space. There's a lot of movement happening with the tie-up with BSNL. But what's your take coming in on telecom? How is this particular sector looking like it? You have Macquarie, which has a positive note coming in for the sector.
I think definitely there's a lot of momentum we have seen in the last few months in telecom sector, but I'll still go with the big boy, which is Bharti Airtel, which is performing steadily in the last few months, and I'll go with that only. I don't want to venture into Vodafone or MTN, and as of now, till we see them on the monthly chart, so I'll stick to the Bharti Airtel.
The one which is doing cartwheels, I think, and I'm fixated with this one, pardon me, is Ola Electric. Value transaction, strong. Volume transaction, strong. The other one where value transaction and both volume transaction has been very strong, I think, is Suzlon. And Vishal, for a trader who has no view on fundamentals and debt, but only on momentum, where is Suzlon headed? Can it be 100 rupees before the year ends?
I think 80 to 100 is not a big jump, and it can definitely see those levels in this year, maybe in the way it is performing on daily, weekly and monthly charts. And it's a clear, strong trend going on. So yeah, 100 looks more likely in this year.
Some interesting data, and there are three stocks which tend to really get a lot of attention from retail investors and traders, and I would say more traders here. And those three stocks are, one is definitely Vodafone Idea. Second, I would say to some extent is Yes Bank, and third is Suzlon Energy. Where is the retail and HNI holding in these three stocks? In Vodafone Idea, there has been a huge change in the retail and HNI ownership. It's gone up by nearly 100%. In case of Yes Bank, the number has changed by 43%. And in case of Suzlon, it's a change of about, 300%. So interestingly, the data seems to be indicating that with the exception of Vodafone Idea, in case of Yes Bank and Suzlon, the HNI and retail ownership has actually come down. And this actually is again a big data change versus what my opinion was till the time I did not look at the data, because my sense was that Suzlon, Vodafone Idea and Yes Bank have only seen uptick largely because of retail and HNI activity, not so much so from institutional activity. But in case of Yes Bank, especially after that capital infusion which has happened by PE investors, of course HNI, DI activity and HNI institutional stake has gone higher. Vodafone, the QIP sailed through and they were able to raise debt. And that's the time HNI and retail activity also increased. But in case of Yes Bank, I think for the first time we've seen a decline in retail and HNI activity, because this is one stock which in a sense is dominated by entire HNI and retail category.
Right. So that's the telling sign coming in for all of these counters, the way how actually the retail and HNI stake has been performing going ahead. But coming back to you, Amnish, what is your take on these counters? Have you looked at any of these counters, given the fact, the way how they've moved, the way how it's actually garnered a lot of investors? Most of them are also touting them to be turnaround candidates.
You see, all of these companies, as you rightly said, they are tipped to be the turnaround candidates. For example, you look at Yes Bank. I think if you compare from the last 2-3 years, the performance is better. And now there is a news that led by SBI, the people who had bailed out Yes Bank 4 years back. So now they are, you can say, looking at exiting, and some probably a foreign player will coming in with a, you can say, large stake. So obviously in such a scenario, I think there is likely to be more consolidation of holdings in Yes Bank as we go along. And usually if you get a strong, you can say, partner which can bring something on the table, then we see more increased investor interest coming in Yes Bank as we go along. So in the near term, you will not find the valuations attractive, but over the period of long term, I think this is got the distribution, we have got the technology. And once I think someone comes in with lot of commitment, lot of money, I think the things can improve. The only stumbling block as of now seems to be the issue of those tier 1 bonds, around I think 8,500 odd crore. What happens to that? Now regarding the other two, Vodafone, I think in the near term the worst might be over. The benefits of, you can say, increase in the tariffs that will flow through. They are also looking at rationalizing some of the postpaid plans, which will indirectly give them, you can say, increased throughput. So I would say from here on, much on the fundamental side as of now, but as we go along, I think the industry will, you can say, continue to improve from here. But definitely, I think I would be better off going with a leader, because you can say the Bharti is doing really well, and whatever happens, if there are more tariff increases, more rationalization in the industry, Bharti obviously will be the, you can say, the first one to benefit.
All right, then on that note, thank you so much, Amnish, for joining us on the show. And
if you like this video, then like, share and subscribe to ET Now.